Good morning. Today we are going to talk about income tax. The income tax was started in 1860 by Sir James Wilson. So James Wilson would coin the word income tax. The term income tax means income and taxes. The term income is charged for the annual income individual or business earned for a financial year. Simple definition of income tax. Income tax is a mandatory payment of charges collected by the state, local, and government for the individuals or business covering the cost of general government goods or services. I repeat again, tax is a mandatory payment charge for the collection of local bodies, the state, national government for individual or business to cover the cost of general taxes for goods and services from the government. The 5 types of income tax are salaries, property, house profit and gains from business, capital, goods and services, and professions from other sources. The types of income tax are income tax, wealth tax, gift tax, capital gains tax, corporate tax, security, government transaction tax. Again, I repeat again: Income Tax Act, wealth tax, gift tax, corporate tax, capital gain tax, and security transaction tax. In 1961, income tax are first used in India except in Jammu Kashmir. In Jammu Kashmir, till 1961, it has been exempted. In 1962, it has been amended. The Law Commission was supposed to be submitted in 1958 in September. The income tax of India includes Income Tax Act, Income Tax Rules, Financial Act, Regulatory and Notification, Legal Decision by the Court. Income tax in India are Income Tax Act, Income Tax Rules, Financial Act, Regulatory Notification, Legal Decision by the Court. The Financial Act is passed by the Minister to the Government of India under the field to know the financial expenses of the business. Income tax rules. The income tax rules are CBDT. CBDT stands for Central Board of Direct Taxes compared to the carry of the Act. The rules and regulations are based on the CBT Act. Every circulars and notification are passed according to the Act of the according to CBT Act. The assessment. Next we are talking about assessment. Access year starts from the every end of the beginning. March 31st of the current year to the next year of the beginning. That means from March 31st. Currently, if we stay about it, March 31st, 2025, it commences and ends in April 1st, 2026. It is considered assessment year. Assessment year also includes in the Income Tax Act. The income tax period is referred according to the current year, March 31st to April 1st, 2027. Previous year, section 3. The expectation in general rules, the previous year is taxable according to the assessment year. The previous year rules are classified according to the current year taxes. Income from non-residents. It comes under Person Act of Section 232. There includes individual, Hindu dividend, firm, location, etc. Next, the 5 important taxation. The 5 important taxation functions: government funding of government, general public services, including structures, healthcare, education, social welfare, and program. Important is income tax is crucial because of the tax is important to find funding for government. The funding of government is for funding of every government. Taxation is crucial. It includes public fund government funding from government functions, public services including infrastructure, wealth, healthcare, education, and social welfare programs. The fund that is received from the government function has been included in the income tax, or public and from public services, including infrastructure, healthcare, education, social welfare programs. From these programs, these areas, the fund has been collected for according to the income tax program. Income tax is collected from every person under section 2(3). According to section 2(3), from each person income tax has been covered. Next, we are going to talk about direct tax. Direct tax is the tax that is imposed directly on an individual person who is directly imposed of individuals and entities from the income and wealth is known as direct tax. The direct tax is a tax that is imposed directly from the individuals or persons based on their income and wealth. According to their income and wealth, the direct tax has been collected. It includes tax, cooperative tax, etc. These taxes are governed by the central government of Central Board of Direct Taxes, that is CBDT, Central Board of Direct Taxes. And calculation of income tax. The income tax is collected to determine the gross salary. According to salary of a person, how much he get, according to it, the income tax has been collected. It is determined according to the total gross salary of a person. It is exempted, the tax has been exempted according to section 10. Under section 10, that income tax has been deducted. The deducted eligible deduction comes under chapter 6. After that, the tax slab is applied. After the income tax has been collected, they have to deduct the standard tax. After standard tax, the tax tab has been applied. It on healthcare and education access. There are 4 types of GSTs. They include central CGST, Central Goods Services, SGST, State Goods and Services, IGST, Integrated Goods and Services, UTGST, Union Tax, Territorial Goods and Services. For the 4 types of assessment: regulatory assessment, representative assessment, denied assessment, and assessee in default. I include once again regular assessee, representative assessee, deemed assessee, and assessment assessee. The person who cannot pay the income tax include the person who is above age 60 or 60 or above age cannot be eligible for pay income tax. The person who is above 60 are eligible to pay the exam. They are being exempted up to 2.5 lakhs. Person who is having more than 2.5 lakhs are being exempted to pay the old regime income tax act. The senior citizen should be around 60 to 80 years. And they should be exempted up to 3 lakhs has been exempted, and super senior includes above 80 to 80 lakhs. The super senior citizen includes above 80 years, exempted up to 5 lakhs. Next, we are going to talk about the factors of income include salaries and wages for labor. For labor, salaries and wages are being included. Rent for land and property, interest for capital, and profit for entrepreneurship. Include salary for labor, salaries and wages for labor. That are the factors of the income. How do factors of income consist of? Means the factors how the laborers, how the government gets the money is using wages and salary for laborers, rent according to rent for land and property, interest for capital, profit for entrepreneurship. Order. Thank you for the class. Thank you.